Good morning, everyone. Welcome to another RF crypto video. Today, Bitcoin turns 13 years old. That's crazy. Now it's a teenager, and the markets are down. We'll be looking a bit at that. We'll also be looking at the Fear and Greed Index and how the market is reacting to the recent dips in the markets. And then it's interesting to see how Binance is investing into liquidity platforms. In terms of regulation and in terms of CBDC, the Boston Fed is hiring a new director for its CBDC project. And after rumors that Estonia would be banning crypto, an Estonian regulator came out in the public and said, "We're not banning crypto, we're just regulating it." Simon Bankman-Fried is also quite optimistic about crypto in 2022 and its institutional adoption. Finally, we're going to speak a bit about Coinbase's executive, so the CPO, Surajit Chatterjee, and how Ethereum 2.0 is coming this year. He thinks it's going to come this year, but we've been waiting for so long. Who knows when it's going to come out? So looking at the crypto market from Coin360, we can see that the market is down by almost 1%. Bitcoin is down by 1.36%. It's now trading between 46 and 47,000. It briefly fell below 46,000. This was the price, 46,000, where I believed that Bitcoin would tank if it went below that. But the bulls quickly got into the scene and then they bought up the dip, and now it's standing at 46,337. Ethereum is also down by 1.2%. The whole market is basically down except for these near and dots. They're up but not by a lot. Fantom is doing really well. It's up to 2.87 and it went up by almost 18% in the last 24 hours. If you look back at around 30 days, for example, the price was as low as 1.41 and now it's standing at 2.87, so that's easy 2x. So if you bought this dip, well done. If it breaks the resistance of 2.9, I think it's going to shoot even higher and reach all-time highs of almost 3.5. It could beat the all-time high, but because the market is quite bearish at the moment, I don't see it happening so soon. Also, the fact that the Fear and Greed Index is at 23, it's at extreme fear. People aren't really buying. People are holding back. They're seeing where the market is going to move in the next few days in order to make their decisions. But as people say, when there's extreme fear, this is an extremely good time to buy. So keep an eye on the coins that have dipped the most and the ones that obviously have real utility. And I think this is a good time to go into some of these coins. If you have some extra cash lying around, if you're fearful that inflation is going to erode it away, why not put it into crypto? But obviously, invest wisely, do your research, and if the market pumps again, you'll make a nice profit. Binance invests $12 million in liquidity platform Woo Network. It's a liquidity platform that connects users to exchanges, institutions, and DeFi networks. And they provide both deep liquidity, which means that trading can happen instantaneously and always. And they also provide zero-fee trading on both on and off-chain. And it's becoming a trend where these type of companies are competing in the sense that which company gives the product or the trading product with the least amount of costs. And zero-fee trading is fantastic. Celsius, for example, also offers the Celsius network. A lot of these companies, they put zero-fee trading in their description, but you have to be very careful because there are hidden fees just lying around there when you buy and when you sell that you might not even realize. Celsius network is one which is quite transparent, and they tell you straight away we don't have any hidden fees, and if you look at their platform, they really don't. We Network doesn't seem to have any hidden fees at the moment, but this can change from one day to another. And they provide liquidity to over 40 institutions, exchanges, trading teams, wallets, and DeFi applications. And these include DeFi protocols such as DYDX, Matcha, Paraswap, 1inch, and Dodo. So these are massive companies. And the fact that they had closed a Series A funding round worth $30 million in November, backed by massive VC funds focused on crypto, such as Three Arrows Capital, Avalanche, and Crypto.com Capital, indicates that this is a liquidity network that is serious, that if they say something like they say that they have zero fees, then that's what they mean. And it's here to stay, and it seems to be very respected in the crypto field. And this comes at a time when Binance Labs, which is Binance's investment arm, is making a lot of investments in the crypto space, in DeFi networks, in layer 2 solutions. And if they invested in the Woo network, it means that they've done their homework, and there is a possibility that this is a liquidity provider that will scale and will improve as time goes on. The Boston Federal Reserve Bank is hiring a new director for its CBDC project. The CBDC pilot program is still ongoing. They expected the project to be in the final stages by this year, but it doesn't seem like that will happen. It says that the project's initial stages were basically done. However, this is just the initial stages. There's still a lot of work to be done, and because they've been looking for a director for so long, work has stagnated quite a bit, and progress is going slowly. And especially compared to companies with the research and implementation of the CBDCs the United States is quite behind because other countries are in their final stages. They're launching CBDCs, and it's a full-fledged CBDC program that has legs to run on, while in the US it's still quite in the early stages and they're taking very long compared to the rest of the world. But obviously the US works fast, they work efficiently, and I believe that they can speed up this process and possibly have CBDC implemented by the end of this year. If not the end of this year, maybe next year. The Estonian regulator says that there's no plans to ban crypto. There have been rumors that because there's been a new draft of a bill proposed to regulate crypto, this will put a ban on all crypto trading, which is not true. A statement from the government came out saying that it will not ban customers from owning or trading crypto, but the proposed requirements for virtual assets service providers such as wallet custodians could apply to decentralized wallet creators, and this could include hefty capital requirements. And these hefty capital requirements would be 125,000 euro or 350,000 euro as a minimum share capital. For comparison, the current minimum requirement is 12,000 euro. But even though these requirements are quite high, I don't think it will be a problem for virtual asset service providers because there's a lot of cash flowing into crypto, and if they need funding and if their product is solid, then they can get 125,000 euro or even 350,000 euro in an instant. The Estonian Ministry of Finance said that the bill is designed to tighten anti-money laundering requirements for these virtual asset service providers and particularly to reduce the creation of anonymous accounts. So with the creation of anonymous accounts, there's an increased risk of money laundering, there's an increased risk of fraud, and there's also an increased risk of terrorism financing and things like that. And it makes sense that regulation is coming because any industry needs regulation. There needs to be rules, or else it will be anarchy. And Estonia's quite liberal stance on crypto, I would call it quite liberal because there have been a couple of countries that have banned crypto altogether, including the biggest one, China. Estonia is not one of them. They just want to regulate the industry so things operate smoothly, and they ensure that the use of crypto is not for something illicit like money laundering or corruption or financing of illegal activities. And this makes perfect sense. It makes perfect sense. So Sam Bankman-Fried, the founder of FTX Exchange, is very optimistic about institutional crypto adoption in 2022. He thinks that regulatory clarity in the US and globally will help a ton on institutional adoption. And what he means here is the fact that there's not much regulation or it's not really clear what the regulation is on crypto. It prevents a lot of companies from adding crypto to their balance sheets. This is just because they don't want to be liable for any damages, for any penalties and fines that might come if they hold this crypto, or if new regulation comes out which bans crypto or limits the amount of crypto a company can use. They don't want to be caught in a trend where they're forced to sell the crypto when the markets are low, because the whole point of holding the crypto is as a store of value and as a hedge against inflation. Another source of optimism of Bankman-Fried's is from the vigor from which the institutions are starting to flood the crypto ecosystem. He says that basically every large financial institution I've talked to, every large bank, every large investment bank, pension funds, they're all eyeing this sector. There are billions, if not trillions of dollars sitting in investment banks and pension funds. And where's the money going to go? Real estate? That market is widely flooded, and it seems like there's a bubble there ready to burst. So the other only option they really have is crypto. There's already a lot of money in crypto, but there's also the possibility for more money to actually flow into crypto. Because there's so many projects to choose from, these companies, these pension funds can hold crypto in the same way they hold stock as a store of value in order to give returns to their investors. And with so much excitement around crypto from these institutional bankers, I believe that 2022, with more regulatory clarity, will lead the path to more crypto adoption in institutions. Something like a tidbit, which is quite interesting that he says, is that there are 3.2 billion gamers in the world, and the crypto gaming industry only comprises of 1.2 million gamers. This suggests that the integration of crypto with mainstream gaming would provide a tremendous boost to global crypto adoption. 3.2 billion gamers is where they can tap into. Even if 10% of those adopt crypto, that's 320 million gamers. That's a lot of money flowing into crypto. There's a lot of adoption, and it's a domino effect where if one adopts, then your friend wants to adopt, and his friend wants to adopt it. Like the PlayStation, like the Xbox, like a Nintendo Switch, the metaverse or metaverse gaming will become more common and it will become more widely adopted. Finally, Coinbase executive says that major Ethereum scaling improvements are to be coming soon. So Coinbase's Surajit Chatterjee is confident that Ethereum will be at the forefront of Web3 and the crypto economy as it scales. So in terms of DeFi, Ethereum is king. Total value locked stands at almost 200 billion, with the second one being Luna at around 21, 22 billion. So it's a massive difference, and Ethereum is still king of DeFi. Chatterjee is optimistic about the improvements in Ethereum scalability with the emergence of Ethereum 2.0 and many L2 rollups. So there are two tangents here. Ethereum 2 is Ethereum 2.0, which improves scalability, improves transaction speeds, and reduces cost. But this has been in the works for many, many months or even many, many years. And nothing has happened yet. There have been a lot of promises that we're going to roll this out now, we're going to roll this out in 6 months, and they keep delaying it. And these delays have worn people down, and we've seen money flowing out of Ethereum to more scalable platforms like Solana and Luna, which has seen massive, massive growth at a time when Ethereum has been stagnant, when their networks are always congested. In order for you to make a single transaction, it costs so much. So if Ethereum 2.0 comes out, it's very welcome. It will be a very, very big help. It can help reinvigorate the general crypto community's love for Ethereum. So this is one part of the possibilities of Ethereum improving in 2022, but the other possibility is ZK rollups, and they will attract both investor and user retention. ZK rollups are basically a scaling solution for Ethereum, whereby transactions are batched into one, and then 100 transactions get batched into one transaction in the ZK rollup in the layer 2 network that is connected to the layer 1, which is Ethereum's main network. So when it reaches the limit of, let's say the limit is 100 transactions, it gets bundled up into one transaction and it gets sent into the main layer 1 network in order to be processed as one. So instead of processing 100 different transactions, only one transaction is processed, and it's quicker. We only deal with the ZK rollup, the layer 2 solution, which is instantaneous, it's fast. You put in the transaction, it goes quickly, and it's cheap. It's very, very cheap. Something that you would pay, for example, $24 to send Ethereum from one wallet to another. With ZK rollups, it would cost, let's say, 2 cents or 5 cents or 10 cents. It's significantly cheaper. They achieve this through liquidity. So ZK rollups have a certain amount of liquidity. When you make a transaction in the layer 2 solution, in the ZK rollup, the transaction stays in that ZK rollup. It's still not in the main network. They just transact from their treasury, if I may say. And then once it gets batched, then they transact with the main network. It's very, very interesting, and it's a very good solution. As I said before in my previous videos, ZK rollups are probably the future of layer 2 solutions and are probably the future of scalability. And projects relating to these are things that should be kept an eye on. Also, the layer 2 ecosystem has undergone massive expansion in 2021 with a surge in adoption for all major platforms. The total value locked surged by nearly 11,000% over the last year, from around 50 million in January 2021 to 5.5 billion by the end of the year. 50 million to 5.5 billion. That's incredibly massive. And I don't blame the platforms for adopting this, because Ethereum as a layer 1 solution was becoming very slow and very congested. And you could not do business, you could not make transactions. It would take so long and it would be so expensive. The networks would be congested. Sometimes the networks would be so congested that the transaction would be sent back and rejected. So having a layer 2 solution such as ZK rollups, where you can make transactions quickly and cheaply, it's a no-brainer. You will adopt it. You rather have something that's quite scalable and is quick and cheap. It only makes sense. And with that, we come to the end of today's video. Thank you for watching. If you liked the video, please leave a thumbs up. Please hit the subscribe button and turn on the notification bell. And if you enjoy the content as well, please feel free to share it with your friends, with your family. And I'll see you tomorrow for the next one. Invest wisely, and cheers.